Well, the euro sliding to a 10-month low this morning against the dollar on all the news that has been coming out of Portugal and also Greece. My next guest is a well-known dollar bull who runs the world's largest currency hedge fund. He's John Taylor, the chairman, CEO, and founder of FX Concepts. He oversees $9 billion there and joining us right here in the studio. Thanks so much, John, for being with us as well. John and Adam also joining in on the conversation. You're a dollar bull, but you're also a euro bear, right?
Yes, yes.
And you're even more bearish from all of these developments?
There's nothing really good happening in the euro at all. The economy's weak, and you have the southern European countries falling apart. In the end, parity then with the dollar, or what? Well, I mean, you're really pushing it there. Certainly 120. Well, parity is a long way. I mean, that's a drop of 45% or so from the high, a year ago. So that's a lot.
So you're talking about a level of 120 for the euro by the end of this year, by 2010. That's the expectation where you see the euro?
I would say quicker than that, probably by August. It's going to be quick because the things are really falling apart, and there's got to be a solution of some sort between now and August, right?
And that's a big move, but made even more so if it's really that fast. I mean, that's incredible, right? Just several months, we get a move to 120.
Well, let's face it, we were 150 at the beginning of this year, or in December, and now we're 133. So, John, what would have to change? What would have to be done in order to reverse this course in the euro? Well, it's kind of difficult, because in many ways the euro is misformed. It can't continue to exist like it is, and you have the Germans saying, sorry, this is going to stay right where it is. And so, therefore, there really isn't a solution. I would say the weak euro is a very easy forecast. Weak euro, but you're saying parity is kind of a stretch. But then I also hear you saying that it can't exist as it stands right now. So what exactly is your expectation then, aside from just the short term, where it's going to land in 6 months? What are you actually saying then? Yeah, some of these guys have to be thrown out. Now, I say some of these guys because I don't want to say, geez, Greece, Portugal, you don't know which ones will do it. If you look at a country like Latvia, which has effectively in the euro, has been saved by the European Commission and the IMF, much like they're suggesting Greece will be. Their retail sales were down 30% last year. The GDP was down 18% last year. It's expected to drop by another 8% this year. Latvians are starving. I mean, the place is a disaster area, and that's what you have to go through in order to be part of the euro.
John, hedge funds have been criticized for politicians for what they claim are bearish bets against countries like Greece or currencies like the euro. Has your firm felt any political pressure not to make bearish bets like that?
None at all. I don't want to invite it, but I think we're really very small relative to the big companies and everybody. Any multinational company has positions in the U.S. and in the euro. It's got to, and look at what's happening. They've got to be shifting back to the U.S.
But just to follow up, regulators, I mean, do they ask for trading records or anything like that? I mean, have you had any calls for information from anyone? Well,
we're SEC regulated, so therefore they get to see that information, and it's there. But nobody seems to be caring about it. But are you treading more carefully, I guess? Are you just making sure that you're a bit more careful because the regulators are unfairly or fairly really hot on the hedge funds? Right. I think we've always been careful. I think, yes, we're very aware of the situation. And you think it's been unfair against hedge funds, the way regulators have talked about them? Well, I think some of the boards that are coming out in the press and some of the comments that have been made are totally unfair. They just don't have the pressure. I mean, this meeting they had in a restaurant, a month and a half ago, in order to town home, in order to attack the euro. It's a little crazy, right? I mean, yes, they had a meeting and they talked about how bad the euro was, but that they in fact had some impact.
Right, when they add up all their assets and it's 1% of the daily volume.
That's right, exactly. It's 1% of the daily volume, and somebody like us, we weren't there or whatever, we probably have a bigger position against the euro than than those people put on.
Okay, could be conspiracy theories sometimes abound in these times. Okay, John, we'll be back with you. We'll be back with John Taylor. Now with John Taylor, he's the founder, chairman, and CEO of FX Concepts, which is the world's largest currency hedge fund. And John, you know, piggybacking off of that, the yuan, what do you make of that? You know, this now escalation between the U.S. and China.
You know, I mean, this is something where something's got to give. And the Chinese have made all kinds of reasons why they're not doing it. That's politically not the right time. We don't have a good banking system. Nobody else is complaining. A lot of those reasons are...
Eventually, though, you think they will?
Yeah, they must. They absolutely must.
You know, something caught my eye this morning. 3 Chinese CEOs all suggesting that the yuan should be allowed to freely float. Lenovo, Merchants Bank, Hunan Steel, all CEOs. This is new, isn't it? That CEOs would speak out against Wen Jiabao?
It's totally new, and what's very interesting is I'm going to be very interested to see what happens to them in the next 3 months.
John, let's talk about the dollar again. Say over the next 3 months, where do you think the dollar will be strongest? Against what other currency?
It'll be strongest against the euro. And then maybe the Eastern European countries that are sort of surrounding the euro and dependent upon health in the European community.
And is that the single best trading idea you have right now? 3-6 month horizon?
Yeah, and the 3 to 6 month horizon. And then the further horizon is to be long Asia and short Europe.
Yeah. Can you give us a little bit of color on that very quickly?
Well, it's clear that Asia has come out of this recession in 2008-9, you know, screamingly fast and very strong. And Europe is not coming out of it at all, and the United States is in the middle. So sell Europe, buy Asia.
But John, I mean, is there some risk, though, to buying the dollar simply because the rest of the world is going to pot?
Yeah, there's risk in everything, but...
Well, you know what I mean, though. I mean, because you're not really buying the dollar because you think the U.S. is so great and the economy is on the mend. You're buying the dollar because everybody else thinks the rest of the world is worse.
That's right. That's right. But, you know, it's an ugly game. You know, you've got to pick the least ugly thing out there. You don't have any other choices.
Okay. All right. John, well, no, there aren't a lot of choices, right? Unless maybe you go somewhere like, I don't know.
Not one of them, I guess.
No, well, the Aussie dollar is too small. I mean, everybody owns the Aussie dollar, but you have to look at Aussie, that the average house in Australia costs 7.8 times the average wage. In the United States, that number was like 5. And we cratered because our house prices were too high. So you have to keep a little, an eye on. Australia's doing fantastically because they're shipping everything to Asia. They're digging up the whole continent and sending it all to Asia.
Okay. John, great to have you with us. Thank you so much. John Taylor.